Recording in progress.
Good evening, everyone. There's still 4 minutes until 9 p.m., so we shall wait for a little bit, and then we will get to start on today's session. And today, we are not going to talk about the options and all those. Previously, we all doing the class about options, right? So now today, we are going to talk about technical analysis, and it's kind of like my core principle of how to do a technical analysis. And I have using technical analysis for like around 8 years, and this is I'll also share my journey of why I'm choosing this kind of technical analysis and the pros and cons of doing so. So I hope that my skill will help you guys in your futures and also in your development of the technical analysis. And yeah, so today there will be no PPT at all, and then we will just directly using the I would say this is the trading view setup, not the setup but the website. And yeah, so you might be just drawing around and then just click from those like boring style or the lecturing style. So yeah, so hope you guys can just join my class, and then we shall get started on how to build your own technical analysis system. You might be wondering about why are there so many teachers that teaching all about the technical analysis, but none of them work for you. But personally, I think that technical analysis actually works differently for everyone. So eventually, you will find your own style, and then you will have your own technical analysis, your own principles, the concept of doing so. So yeah, so if you're just checking around for the perfect strategy, you might be searching forever and you didn't find any. So just wait for a little bit, then we shall start on today's session. I guess let's wait for about 3 minutes. About 3 minutes, then we will start on today's session. Let me reply for a message first, yeah. Okay, so it's already 9 p.m. sharp. Then let's wait no more and start on today's section. So yeah, I think today's will be quite an interesting sessions to go with, and I hope you guys can just focus throughout all the sessions. And yeah, just let me start with technical analysis first. And there will be actually 2 types of people who are doing very well in market. The first one, they tend to like make a ton of money from just in the trend, and then while there's no trend and there's not a bullish market and not a very obvious trending, then they will just rest or they will just losing a little bit back to the market. And then the other type, they are just keep on gaining bit by bit from the market. So I would say that one is actually the trend catcher, and the other one might be a very consistent and disciplined trader. So you might see that their style will be different, and then you might find that their chart looks different also. Usually when especially now in the bull market, you might find that many people can actually catch a very huge bag of wealth, but then eventually cannot keep it until the end. And they might, even though they're able to keep it until the end of the bull market, then they might losing it after a few years or after just half a year after the bullish market is gone. So that will be the first type, which is the trend catcher, I would say. Let me adjust a little bit on the setup for easier drawing. So their equity graph will look differently, and you might see that the first one might be going around like this. It's going up in the bull market, and then it's just starting back to drop back to the where it should be, or it just fluctuated around when the bullish market is gone, and eventually it will just losing back some money. So they're actually trying to just catch a very huge back in during the very, I would call a lucky session, even though a new beginner can make some money in the very bullish market. So because there's no top roof for those stocks to go up, so this kind of people usually they will just try to make a huge loss when the market is there, and they were just trying to lose it back a little bit by a bit. But there are some kind of traders which is very well acknowledged about this kind of situation. So they will just, when they make a huge bet, they will try to lower the size. So eventually it will become something like this. When they make a lot of money, and then even though it's still losing throughout the years after the market is gone, but it's losing in very small amount. So they can just keep the wealth that they gained from the beginning, and then they just keep on controlling the size of their losing. And this is also one of the type of the very successful traders. While the other one, which is a very disciplined type, you might find that their equity graph will look like this. They win a little bit, and then they lose a little bit, and then they just keep on practice their skill and just keep on to just participate in the market, and then it will just continue to, just compound their gains. So I would say that actually there are two types. One will be the trend catcher, and then the other one will be the disciplined traders. Not the discipline, but the consistent type. Okay, so there are pros and cons for everyone, but you might find it differently because usually the trend catchers only do it well when there's market, so they actually can just only doing it well in the market. When there's a bullish market, I would say a big bull is coming, so they're actually doing well when the big bull is coming. While the consistent type, you don't need to care about what is the current market condition. They have a way to just consistently making from the market. And it depends on what type of trader you want to be. And then if you are the first one, then you might find that you have not that much of chance to just practice your technical skill in the market, because just like US stock market, the bull market comes every 4 years. So you only have that chance to practice your skill during at that time. But if you are the consistent type, then you don't need to catch a very huge back from one day. You are just trying to just get a little bit by bit and then try to compound it. Then you don't need to care about whether it's a bull market or a bear market. So what's the reason I'm doing this? So because if you want to become a consistent type, then you will need a more advanced technical analysis skill comparing to the trend catcher. If you are the trend catcher, you want to be a trend catcher, you just need to be ambitious when the market is calm, and you need to be careful when the market is gone. While the consistent type, it might be a little bit more difficult because you want to control your emotion in every day, because you are trying to do trade every day to just catch some pocket money from it, and eventually you just compound your size. But believe me, because the consistent type can actually make you a very huge back money across the time. Because nowadays there are many like prop firm, I would say, many funding house that are willing to pay you to just trade for them when you are skilled enough, you have enough skill to just make a consistent return, then money will come to you eventually. And then you don't need to worry about your daily expenses, and then you can just make a lot from those funding house, from those prop firms, and then you can just become a full-time trader. The consistent type usually will become a full-time trader, while the trend catcher type will normally become like influencer because they have a very significant result to prove with, because they previously they do catch a huge bag from the market, but in the normal days they don't really do some any trading activity. Okay, so this is the difference in between, and then today we will be cover about how in general for technical analysis, but usually it will be more useful if you want to become a consistent trader. If you want to become a consistent trader that can make some gain from the market throughout the days, and eventually replace your current job, and then you will need to learn about technical analysis. Okay, so when you come to technical analysis, usually what you will start with, usually people will start with about moving average, about exponential moving average, how about MACD and RSI. This is what we call the indicators for technical analysis. And this is usually where we start on how to do a technical analysis. So actually this one is very beginner friendly, it's very user friendly. While if you already try all those and you didn't make money, you might want to search for some very advanced conceptual things, which is like usually market you heard about smart money concept, and about inner cycle traders. This is two very powerful conceptual trading strategy. And some people might using a naked chart also, like Raja Banks and also the other very famous YouTuber. And they try to just keep on relying on the basics, the fundamentals of the candlestick movement to just doing it well. So there is indicator style, there is a conceptual style, which you want to guess on the institutional move, like liquidity swap, and also where they're trying to just collect their bets. And then there are the naked trader style, don't care about what the market is doing, don't care about what the retail and the institution is doing, they just care about what the candle tells them. So it doesn't matter actually, because this is just about market behavior. So as long as the trade is able to duplicate, then this is a good one to use. Previously, I started with a very simple MA and EMA, and then afterward I found that I am not able to just make a very consistent profit from it, and I start to learn about the SMC and ICT things. But even though I learned about all those very advanced conceptual things, I still not able to make money. So I try to, they say the most profitable things come from the simple one, the most simple one. So I go to know about the naked chart patterns, the impulse entry, the breakout, the FX and the flag pattern, the channels, upper channels, and the triangles, metric triangle things. But eventually I found that this is not about what type of the analysis method that you use. It's about the core principle of how you trade the technical analysis. Why I say so? It's because as long as the most important part is it duplicable? Let me enlarge the size for a better view. Is your winning trade able to duplicate in the future? That is the most important thing. Because we as a trader, we actually not trying to guess on what the opposite party is doing, what the institution is doing, what the bank is doing. We are just trying to make money from it. So eventually, we are just trying to just catch all those high win rate setup and all those duplicable market behavior. It doesn't matter what is the basic theory that drives on the market behavior, but we only need to know what will contribute to our win. If you don't even know that is your winning trade able to duplicate or not, it's very easy to tell. Let's say that when you just, if the next time that you watch on the same chart, are you able to just have the same opinion, the same entry, the same exit, the same take profit and stop loss? Are you able to do so? If you doesn't able to have the same opinion on all of these things, then your trade is actually not able to duplicate. You don't even know that what is the reasons behind your win. You don't even know that what is the factor that contribute to your winning trade. You don't have any idea on your setup. You don't have any. You don't even know that why are you profit. You just think that your analysis on this particular trade is fabulous. It's like you're like a god in the market that can predict the future. So some kind of people, in the beginner stage, I also tried in this kind of concept and this kind of misery, because I don't even know that I don't do journaling at the beginning, and I don't even know that why my trade will success and why my trade has will lead to this kind of result. What is the setup that can contribute to more wins? No, I don't have any statistic to tell that. Am I able to just keep on doing the same thing in the market to generate wealth? So, as long as it is duplicable, you are good. Else, you are getting fucked up, I say. So, if you check it in now in this time, you actually have let's say that in today's trade, it's very simple. Let's say that when the first time you check on this trade, you're actually expecting a very bullish breakout, and then it do break out and you get in here, and this is your entry, while your exit might be your stop loss might be somewhere down there and your TD might be somewhere out there. But if the next time you trade, you are trying to just become you think that this break the market structures, and it's kind of like a reverse thing, so you want to do a liquidity swap, and every time you have a different opinions on the chart, then you doesn't have a very disciplined trading system, I would say. So when you're trying to build a technical analysis trading system, you will need to ensure that every time your system is actually set up of all of these things. So every time you check on the trade, you check on the chart, you can tell immediately what is the type of trade that you want to do. What are you going to do, a breakup, or are you going to do a liquidity swap, a pickup, and are you going to just wait for a reversal here? So you need to know what kind of trade you want to do, and you need to know is this kind of setting, this kind of setup are enough for you to just cover your losses. Because even though you are like a god in the market, you can just do a very well precise analysis in the market, but you will lose some time even though all the things are aligned. So don't try to look for a very don't try to look for a 100% win rate strategy. It doesn't exist in the market actually. So you don't try to just make sense of your every trade. Like if you win this trade, you don't try to just take the credit to your own analysis. Sometimes your analysis and the result is not related. Even though you do a very well analysis and then it goes to a direction, this is actually the result that the market goes giving it to you. So we as a trader, we actually just try to just become profit from the repeatable market actions and a very high win rate setting, rather than just just giving the reason of every action in the market. So like let's say you get into this trade. Let's say you get into this trade. And then you have a stop loss just underneath here. So if you get into this trade and then you profit, don't be too ego on that, because one trade doesn't mean anything to your success in trading. And then if it just goes down and then you make a losses, don't try to find a reason or an excuse to just support on your analysis. So even though your analysis is doing right, sometimes the market doesn't just go into your way. Market doesn't really make sense at all sometimes. So this is what I want to bring it to you. And no matter how precise your particular trade analysis is, you can still lose at some time. Even though the correlations, all the time resonance, all telling you that it will go up, but sometimes it drops without any specific reason. You need to understand that trading is actually a long run. So the most important thing is you need to see the overall result in 1 week or in 1 month, or better a longer term, like 1 year, 2 years. So, but not just try to just too focus on this particular day. So since I having this kind of the concept in technical analysis, I didn't place too many weight of one trade or analysis too heavily. I personally just want to make it simple. I will just use indicator instead. Personally, I'm actually using the EMA ribbons here. Why I'm using a technical indicator instead? Because your analysis on the market structure sometimes you goes wrong. You might see a break of structure here, or a fair value gap inversions here. If you learn about the things and the SMC things and all those, so sometimes this one is more obvious actually though. So every time you come back to the fair value gap, it just keep on rejected. So next time when it comes to here, will you reject it or not? You are not so sure. So it can be a fair value gap here, a fair value gap here, or a fair value up here, fair value gap up here. So this kind of analysis and the market structure analysis actually is more inherently subjective when comparing to indicators, because when you use indicator is made purely by mathematics. So it minimizes the potential error on those intuitive analysis. For me, I will use indicator instead, because I want to try to reduce the room for my human error in the very intuitive analysis on chart. So I use indicator instead, because when EMA tell you it's going up, then it is going up. It's the uptrend. It doesn't matter about your own opinion. So the indicators will tell you the direction instead. So it reduces the emotions of you buying on the market, and it reduces the potential error of your own subjective opinions. And all those like the market structure, the candlestick patterns, the naked chart analysis, and also the SMC ICT, it's actually it's actually resistant to a very accurate measure. Let's say we are both using a naked chart, and I'm bullish, but you are bearish. So I will see a breakout here, but you are thinking a liquidity swap or a fake out. So this is what we're calling, even though we have the same analysis on the naked chart, but we will have different opinion and different biases. The reason that I'm using an indicator instead is to make sure that every time I check on the chart, no matter in the past or in the future, I will have the same directional bias, but not just due to my own opinion on the market condition. Because I'm feeling that right now it's a bull market, then I'm going to do a long trade instead. But in the future, can I just remember why I'm doing a long position at today? Can I remember at that time? Or can I just duplicate my trade at that time when I see the exactly same trade up in the future? So the reason I'm using an indicator is because I want to make sure that I have the same bias every time, a same entry and exit every time, no matter in the past, in the present, or in the future. That is why I'm using a technical analysis. It is purely mathematical and it reduces the potential room for human error. So, but however, the indicator you use need to make sense. Why I'm saying so? Because if you are let me say on this. What is the important factor for you to build a technical analysis? First of all, bias. Second, entry. Third, stop loss and TV. So let's do it bit by bit. For the bias part, I'm using a technical analysis. So how do I just make my setup even better? I'm using a time reference. How do I say a time reference? I was using different time frames to do so. Let's say that for 1 hour, it is going up. It is on the EMA ribbon, above the EMA ribbon. So on 1 hour, it is uptrend. So let's make a marking here. 1 hour, it is uptrend. And then let's check on 30 minutes. 30 minutes is still above it. And then minutes also up. Also uptrend. How about, let's say, 4 hours? 4 hours is also above it, so 4 hours is also uptrend. So right now, for example, when I'm going to do a trade, what is my bias? I'm using the indicator for the same time period. So all this time frame is telling me I need the trend is going up. So in this kind of situation, my long setup will have a better win rate compared to a short setup. So this is what we call a time resonance. So actually this one is way better when you're comparing to just combine the indicators here. Because if you are using a combined indicators here, like EMA, MACD, and also everything in one chart, and in this time frame, the information it can give you is very limited. But however, if you're using a time reference to just increase the win rate, you'll find that it is very effective because different time frame is telling you that the direction that it is going. So when all of these align, your possibility of the bias will increase a lot. Okay, so let's say I'm showing my way of doing a technical analysis to you. When I'm actually doing a technical analysis, let's say I'm going to do a 1 hour trade. I'm going to do a trade on 1 hour. So I will check on a bigger time frame situation. Let's say I check on a 2 hour situation. So let's say a 2 hours tell you that I am in the uptrend. And what about 4 hours? 4 hours is also an uptrend. What about a bigger time frame? I'll use 3 bigger time frames for me to just confirm on my biases. And about daily chart, it is also above the EMA. So daily chart is also uptrend. In this situation, when I'm doing a trade setup in 1 hour, I'm going to do a bullish setup. So now that we have the biases confirmed from bigger time frame, and what are we doing actually? We are trying to just catching the movement in the bigger time frame. So let's say that for 1 hour you have this candle, and 4 hours you have a similar candle here, and also the 2 hours have a very similar pattern here. And then when you are doing in 1 hour, you are actually trying to catch the movement in 2 hours and also 4 hours and also 1 day. So now we have the biases, and we get back to 1 hour. And now you need to determine your entry, your stop loss, and also your take profit. And now what matters is the risk to reward ratio. So there are different ways of doing so. Let's say if you get in right here, after confirming, so you are not waiting any setup, and then let's say that your stop loss is here, and are you going to aim for 1-to-1 risk to reward ratio? Let me explain what is risk to reward ratio. You can check the number here. The risk to reward ratio is about, if you're losing $100, then you are making $100. If you are losing, if a 1 to 1.5 risk to reward ratio, is meaning that when you are losing $100 here, you are betting $100 here. You win a trade, you will get 150. And a 1 to 2 risk to reward ratio is meaning that when you are betting $100, you are actually expecting to get a $200 when you are in profit. So this is what about risk to reward ratio. For me, personally, I'm only doing it in 1-to-1. What is the reason of doing so? Let me explain my point to you. Let's say I'm just giving you this number. Right now I'm just giving you this number, 2660, without any previous candles, without any information, without any technical analysis. What is your win rate of doing a bullish setup and also a bearish setup? What is the possibility that it goes up, and what is the possibility that it goes down? Will it go up or will it come down? I would say the possibility of going up and going down is 50-50. If there's no extra additional information for you, I have no historical bars provided to you, I have no chart for you to analyze, I have no fundamental information, I have no financial report for you to do any kind of analysis. And if that is the situation, your win rate to this situation will become 50-50. It will either go up or it will either go down. So what is the purpose of using a technical analysis? When there's no technical analysis, your win rate when there's no additional information, no technical analysis, no fundamental analysis, I just provide you current pricing. The chances that it go up and goes down is 50-50. And when you are doing a technical analysis, you are actually expecting to raise the winning rate that favor to you. You want to make it when you check on all the historical bars and when you check on the chart using different time frames, you are actually hoping that your trade can win. Your trade have a higher possibility to win. So when you are using a technical analysis, you are trying to increase the win rate. But if you are using a higher risk to reward ratio, what is the outcome that it will lead to? When you are using a higher risk to reward ratio, you are actually reducing your winning rate. So if you are going to set a high risk to ratio like 1 to 2, 1 to 3, 1 to 4, 1 to 5, that is okay. But you will eventually reduce your winning rate, and you need to just achieve a balance in between your analysis method, your trading setup, and the risk to reward ratio. So you are just trying to achieve a balance. It's like a yin and yang. So it is very difficult to tell that what part of your analysis goes wrong. Are you being too greedy, or are your technical analysis doesn't make sense at all? So for me personally, I will try to just fix one of it. I'm fixing the risk to ratio to 1 to 1. So if my winning rate is below 50, then I know that it's my technical analysis getting very bad. I'm very bad in technical analysis. So I know that what is the part that I need to just improve. What is the part that I need to develop? What is the part that I need to study of? So by fixing my risk to reward ratio to 1 to 1, I'm able to just focus on technical analysis instead of the other things. And when I'm raising my risk to reward ratio, even though sometimes the direction is getting right, but I didn't make any money. So it's very difficult to tell that which part is going wrong. So I personally actually prefer the kind of a 1-to-1 risk to reward ratio. If that's the way, that will become my shortcut to success, because the only thing I need to focus is my skill in technical analysis, but not about and when I have a higher win rate, I myself also able to play better, to have a better day in trading. So I personally actually I would recommend a beginner to use a 1-to-1 risk to reward ratio instead of trying to be greedy and trying to make a lot from it. And if you fix your risk to reward ratio to 1-to-1, then you can tell that all the technical analysis that you learn, is it really helping you to increase your win rate or not? So there's another alternative way to doing so. You don't need any technical analysis. You just keep on increasing the risk to reward ratio. So even though let's say that you increase the risk to reward ratio to like 1 to 10. So you only need one winning trade in 10 trades, then you can cover all the losses and make a gain. And if that is the case, you don't even need technical analysis. You can just make a random bet, and then you're just hoping that your 1 out of the 10 you're able to just win the trade, and then it will cover all the losses and in giving you your return, your desired return. And that is a different way of playing. So just like betting in the casino, you don't need any analysis. If let's say that you are playing a machine. I don't know what they call 老虎机. The one that will give you a tons of money when you just try to get a 777 in that machine. So if that is the case, you're just trying to make some bet like $10 every time, and then and keep on betting until the one time that you get a jackpot, then you're able to just make a money and cover all your previous losses. That is one of the way of doing it also. But I personally don't like the kind of way of doing so. So I'm just trying to just fix my risk to ratio and just trying to improve my technical analysis. And I like the feeling that my winning rate is high. So among 10 trades, If my winning rate is able to achieve 80%, then 8 of them is in profit. 8 of them is in profit. That will hurt my mentality very well. So I can just come back to the market every time and not being just driven by the emotional and not being formal, not being trying to just revenge trading in the market, not trying to just try on to just prove that I'm the right person. So personally, I would recommend a new beginner to just fix on the risk to ratio to 1:1, and then just trying to improve your technical analysis skills. If you are doing a 1:1 and you are not able to increase your win rate, then I can tell that you are actually very stuck in technical analysis, and you need to just check on all your historical trades, because if I didn't give you any information, you can achieve a winning rate of 50%. But when you're doing an analysis, you doesn't increase the winning rate but you reduce it, then actually I can tell that all the things that you learn is actually wasted. You are very bad in technical analysis. So one way to prove your technical analysis is actually fix your risk to reward ratio. And when you're fixing the risk to reward ratio, you can tell that if your technical analysis is doing well or not. And you can check on if the better you do your technical analysis, then you can have a higher win rate instead. And what is the way of I will just give a little bit hint on how to increase your technical analysis skills. Personally, I'm actually using two different things. One is the time resonance. The second is correlation. As simple as that. So, other than the chart patterns and also all those things, I truly believe that these two things actually help me in my trading. About time resonance, just like what I present to you just now, when all the time frame is showing me the same direction, or majority of them is showing me the same direction, then I have a higher win rate in my biases. What about correlation? Okay, correlation is something like this. Let's say that you are trying to just, in this case, I'm using gold. Then you can check the correlation to other metals and to the USD dollar. Or if you are going to trade the US stock, then you can check the correlations to the other stock in that particular sector and that particular industry. If all the stock in that particular industry is going up, but your stock, the one that you're picking, is not going up, then the possibility of this kind of thing happen is relatively low when comparing to it just doesn't follow the market trend, the sector trend. So when everyone is talking about AI and all the tech things, the tech sector and the AI sectors will just go up in a very obvious way. So that is what we call a correlation. If you are doing a US stock, then you check on the other stock performance in the same industry. They're all competitors. So if you are doing a forex, then you can check on the US dollar and the other same commodity. And if you are doing a crypto, you can also do so. Let's say that you are doing a Bitcoin, then you can check the BTC dominance and also the USD, the market cap, and also the USDT market cap also. So this is what we call about the correlation. So instead of just focusing purely on this chart, you can actually use many ways to increase your winning rate. So I will recommend these two things. So when I'm doing a gold trading, actually I am using a time resonance and a correlation. So when I'm doing a US stock, I also do a time resonance. I check on the higher time frame biases, and when all of them align, then I will only get into that trade. And then I check the correlation, which is how the other stock performing in the same industry and sector. If all of them is doing well, then I truly believe that it will just bring the stuff that I trade to go to the same direction too. So this is two way of doing it. So when you actually just have your own skill, your own particular indicators, and you fix on the risk to ratio to 1:1, and you use this kind of time resonance and correlation things to increase your win rate. If all of these things doesn't help you to increase your win rate instead, then actually you can just try to just abandon about technical analysis thing. You can just try to do it in a different way. Either you can increase your risk to ratio to a very high percentage, and then you can, if you want to do a technical analysis also can, but it doesn't help since you already proved that your technical analysis is suck. So we will just try to just figure out what is the factors, what is the aspect that we need to improve on, and is that aspect suit you or not. So even when you do all of this kind of study, but sometimes technical analysis doesn't suitable for everyone. And if you really find that technical analysis doesn't suitable for you, you might even try to just do it in the other different way. You can try to do it for the other market. Let's say if you are not doing well, you are not your technical analysis doesn't go well for US stock, then you can try crypto, you can try forex, you can try the other market, or you can just directly switch from technical analysis to fundamental analysis. So you need to just fix on the other factors first, and then you improve one of them, and then you'll find what's suitable for you. What is the things that will help you to just make a consistent profit from the market. So for beginners, once again, I repeat again, try to just fix your risk to ratio 1:1. In that way, you can just focus purely on technical analysis. And technical analysis, you can do it whatever way you want. You can do it there are three types that we talked about, right? The indicators, the conceptual, and the naked chart. So this is the three mainstream here. Indicators will be about EMA, MA, MACD, RSI, and all those. And conceptual is about smart money concept, ICT, inner cycles. So this kind of more like a concept. They are trying to just visualize on the what is the institution is doing, what is the retail trader is doing, what is the bank is doing, and trying to just catching all those market behavior from the chart. And the last one is the naked chart. They believe that the most profitable things come from the most simple thing, which is the naked chart. So this is three major mainstream in technical analysis, and then actually every one of them works well as long as it is able to duplicate. So that the most important thing is every time you check on the trade, you check on the chart, you can tell immediately what is the direction you need to do, what is your entry, what is your setup, what is your exit and PV. Then that is what we call a duplicable setup, a duplicable trading system. If every time you come to the chart, the same chart, you will have different opinions, then you don't really have a trading system. So first of all, you need to figure out what is the trading style that fits you. Is it using indicator, conceptual, or naked? For me, myself, I prefer the indicator because it is purely mathematics and it reduces my human error in the other type of analysis. So, in the other way, when I use the indicator, I am trying to just using the time resonance and also the correlation to increase my win rate. And that actually my whole trading system, as simple as that. So I'm using indicator to confirm my biases, but my biases are confirmed by using time resonance. Let's say I'm using a bigger time frame to confirm my direction. But if all of them doesn't align, or I didn't come with a mutual consent on the direction, I will just skip the trade for today. And why am I using indicator also? Because I'm lazy to do all those analysis. I'm lazy to guess about what the candlestick pattern is doing, what is the bank is doing, what is the institution is doing. I want the most simple one. When I check on the trade, the first time I saw the trade, the first second I saw the trade, saw the chart, then I know immediately what direction is it going. I don't need to do any extra brain work. Because for me myself, one trade, one particular analysis is not really important, as long as I can make a profit in overall. Let's say that I make an analysis for today's chart, and even though I lose my trade, it doesn't mean that I am a failure trader. It's just one trade for today. If I lose for today and I'm able to get back from tomorrow, I'm able to make money in 1 week in general, in 1 month general, then today's trade actually doesn't mean anything to me. Doesn't mean anything to my trading setup and my trading system. So, if that is the way, I didn't take one particular trade and one analysis too heavily. I want my brain work to be more simple, most minimal, and I want it to be most duplicable. I train myself not like an analysis, but an executor of my trading system. So that is about the masterclass for technical analysis today. And do you guys have any questions? Let me check on the chart because I didn't open it loud. Okay. So if you guys don't have any questions, then I will be ending for today's session. So this is the way of doing, constructing a trading setup, a trading system. You need to find your way of analysis method, and then you need to find the balance in between your risk to ratio and your technical analysis. And after that, you need you need to journal your trade, and then you can tell that what is the factor that contribute to your profit trade. Don't try to take the credit of the wins to your own analysis. That will be a reason that contribute to it. Like this kind of setup have higher winning rate, higher possibility of winning and whatsoever. So we are not a god in the market. We cannot predict the future. We want to try to find the duplicable winning trade in the market. As simple as that. That is what a technical analysis to me. So if there's no more questions, then we shall end for today's session here. And thank you guys for joining. And I hope to see you guys once again next time. Thank you.